Valens Research, Uniform Financial Analytics.
Toyota, one of the largest makers of automotives in the world, and Toyota is also Japanese based, but has an ADR in the U.S. So obviously a name that a lot of people care about. When we look at Toyota, what's really interesting here isn't so much something recently on the return on asset base, but already we can see something jump out. Look at how much more profitable this company was from 2014 to 2017, 2018 than the as reported metrics reflect. This company, in the midst of one of the strongest auto sales recoveries that we've seen in a long time, when all of the auto companies were actually, lack of a better word, getting religion on trying to be more rational about their investment, actually had a much stronger profitability than as reported metrics reflect. That's not actually relevant for today, right now, but it is really powerful to understand. If you were going to understand and benchmark Toyota, you need to understand that. What we really want to focus on today, though, is actually the last chart here, value to earnings prime ratio. And the reason why we want to focus on that is because when we look at the real valuation of Toyota, what the market is really actually paying, the market's not paying a 10 times PE for Toyota. Toyota isn't trading, if we just talk in US equity multiples, at half of what the average PE is in the US. Toyota is actually trading at a 20 times multiple, a lot closer to what the average PE is on a uniform accounting basis right now, just in the US. And that's really important because this helps us all of a sudden understand, wait, this company isn't as cheap as people think it is, right? It may long-term be a higher performing business, but it's also not cheap right now because the fact that it's trading at a 20 times PE. Now, we might point out, right, it's also trading at a 0.8 times value to asset prime ratio. So it's trading at a discount to assets. But if we just look at it on a PE basis, if you were screening this company on a PE and you said, let's just take the bottom quintile or the bottom decile of PE, this company would probably appear. You'd think you were finding cheap companies in your screening, and you actually aren't, because Toyota trades at a 20 times multiple, not a 10 times multiple. Again, this is the whole entire powerful thing that we're seeing here. We are literally changing how we understand companies when we look at the right data. And that's what's so important.
Valens Research, the world's leading source for uniform financial analytics.